Hello, everyone. Thank you for all attending this webinar today. We're very, very proud and pleased to have with us Vikram, Haksar and Carrière-Swallow from the IMF, live from Washington, who are going to give us a talk on the economics and implications of data in the financial services arena and on a more macro scale. The talk should last, I think, around 20-25 minutes, so we should have some ample time for Q&A. As Anthony said, if you just drop your questions into the chat, we'll then probably bring you on live to ask the question directly once we've finished. But let me give you a little bit of background about Vikram and Jan. Vikram Haksar is the Assistant Director at the IMF Strategy, Policy and Review Department. In this role, he currently leads work on finance and technology, macro financial analysis, and policies for assessing and addressing financial stability risk. He has been the lead author of all of the IMF's main papers on fintechs, and most recently the groundbreaking Bali Fintech Agenda. Prior to this, he managed review work on global surveillance, G20 prospects, and spillover analysis. Vikram was earlier at the IMF's mission chief for Brazil during the currency wars that led to the IMF that set up the 70 billion flexible credit line agreement with Mexico in 2009 in the aftermath of the Lehman's failure. He has worked on emerging economies in Asia, including Thailand and in Eastern Europe, and was the fund's resident representative in the Philippines. Vikram received his PhD from Cornell University. And Jan is the economist at the macro financial unit of the IMF Strategy, Policy and Review Department. His research interests span various topics in international macroeconomics with a focus on emerging markets and their policies. Prior to joining the IMF in 2012, he was an economist at the Central Bank of Chile in Santiago. Gentlemen, welcome. I will now hand over to you. Thank you for being here.
Well, thank you very much, Nasir, and good evening to everyone. Thanks, Nasir, for giving us the chance to share this work with you. And I'd like to thank everyone for joining us on your Friday evening to discuss this fascinating topic with us. Anthony is going to be flipping through the slides for us, so he's just going to bring that up now. So the title of the talk is The Economics of Data, an Integrated Perspective, and I'll try to make clear why we really emphasize that point in the work that we've done. So on slide 2, Anthony, the economics of data is a topic that Vikram and I have been working on for the better part of a year. We've written this paper about the topic, which you can find online. This talk will be based on the paper. It'll be a quick overview of the main points, main messages. But if, by all means, if something doesn't get resolved in the Q&A that you're itching to find out, feel free to download the paper and take a look. Okay, moving along. To the next slide. So why did we write this paper now? Anthony, if you jump to slide 4, please. So we see a confluence of several trends. So the falling costs and improvements in analytics are driving the proliferation of data across the economy and in all sectors of the economy. We're seeing discussions of data policies across our membership of nearly universal membership, with major changes having already been made. So we're seeing reforms to consumer protection, open banking regulations, as well as data localization laws. So we really saw a need to understand conceptually what all of this means for the broader economy. And as we'll explain, what we find in the work is there's really a lot of arguments for why data has many economic functions and implications that raise macro-relevant policy concerns right across the IMF's mandate. And there's been a veritable flurry of academic activity on how a data-rich economy might function differently than an analog economy. But when we look at these contributions in the literature, usually to keep things analytically tractable, these papers treat each question in a narrow sense individually. And we saw value in writing a think piece that would seek to integrate all of these different approaches and material. So our fear is that thinking about data policy through the lens of one objective in isolation, say a focus on policies that can protect consumer privacy as an ends in itself. Doing so that way may mitigate one problem while inadvertently causing others to pop up unexpectedly. So this piece that we wrote is about identifying the building blocks for thinking about these questions, identifying the main trade-offs that are involved, and putting our fingers on the open questions in data policy, certainly rather than providing solutions or answers. The issues are complex. It's early in the profession's engagement with this topic, and our message is that we really need to think about these issues carefully. So now moving on to slide 5, we've provided this list of just some, really just a snapshot of some of the more recent papers that we found popping up in the literature as we ourselves were working on our piece. And for those of you who have studied macroeconomics or who are active in the field, you'll recognize many of the names here are really some of, really top-notch academic macroeconomists who are engaging on this question of what does the macroeconomy look like when you introduce a data-rich environment? What about our old models stops working? And what are the new policy questions that come up and that need to be addressed to avoid getting bad outcomes? Okay, so on slide 7, what we find from reading this literature is that you can group these papers into 2 sort of broad buckets or approaches for modeling data in the economy. So the first that you find is a more macroeconomic perspective. It emphasizes data's role as an input in the production function. So this is a really intuitive way of thinking about using data in artificial intelligence or machine learning algorithms to produce a good or a service. Now, of course, the devil is in the details in these models, in the sense that the functional form that you choose to write down your function determines a lot of the implications and equilibrium outcomes that you get from the models. So key questions are going to be things like, does the accumulation of data deliver economies of scale? Does it give you economies of scope across different lines of business? Is data a complement or a substitute to your other inputs, such as labor or capital? A lot of people in the literature have strong views about these questions, but it's important to note that a lot of these questions really are open questions at this point. So what we're finding is an incipient empirical literature that's starting to dig into the data to start answering and guiding and disciplining this theory so that we can start narrowing down our understanding of these questions. And the second approach that you find in the literature is more microeconomic, and that really emphasizes how when you create data or you trade data, what you do is you create and shift information across economic agents in the economy, okay? And this is the approach that you find taken in much of the finance literature, where the production and trading of data about borrowers shifts information asymmetries and affects their access to credit, ultimately. So now on slide 8, once you put data into models, it has 3 key economic characteristics that give it interesting properties, that make it unlike other inputs that we've thought about before. And these can lead to market failures, and they can form the case for policy interventions in the data economy. So the first of these characteristics is that data is non-rival, right? So one agent's use of data doesn't stop other agents from using that same data at the same time. And this makes data quite unlike other inputs like oil. We hear a lot of the time, is data the new oil? Well, in some ways, yes, in some ways, no. In this respect, importantly, no, it's not. When one person uses oil, someone else can't use it. That's not the case for data. And an important benefit that can flow from this non-rivalry characteristic is that you can get increasing returns to data, both in scale and in scope. And so the intuition here is that when you add an additional unit of data, when you collect an additional unit of data, that extra data can be used by all units, all other inputs in the production function, not just the marginal unit. Okay, and so this turns a lot of the main conclusions in the economic growth literature on how you get growth from accumulating capital, for instance, it turns these things on their heads. These economies of scale can apply within a firm, across many firms, or even across border. So a lot of implications can flow from that. One of them is that making data widely available tends to allow society to do more with the data, right? To get more out of it, get more production out of it. And a key question is, will the data be made available? And here, I think an important insight is that private incentives, the people who are collecting the data, may lead them to hoard it and stop it from being shared. And there, a lot of the benefits from non-rivalry do not accrue. So because of data's non-rivalry, a really central focus, sort of the first thing that data policy has to set up, is it has to establish rules for who will have access to data and who won't have access to data. Okay, so now on slide 9, the second interesting characteristic that data has in these models is that it causes privacy externalities to emerge. Okay, so why do we frame privacy this way? When agents make decisions about whether to collect, trade, or process data, they impose economic costs on other people who are not compensated or who may not even be aware that that decision has been taken. Okay, so think about a social media user who shares information about one of their friends on a social network, or the social network itself selling on one of its users' information to an interested third party. So an important insight here is that privacy, as we understand it, is not really about mandating less data sharing, less data access, but rather it's about granting control to individuals over the data that affects them. Okay, now on slide 10, the third characteristic that we pick up from the literature is that, because data is kept on interconnected networks, making it excludable is expensive. Okay, so investing in cybersecurity is a decision that firms have to make about how excludable they want to make the data they've acquired, right? And there's an externality lurking here as well, in the sense that the private incentives to make data excludable, to protect it, may not fully account for the harm to public trust and to the broader system that can result when an individual data set is breached. Okay, so now slide 11. What does all this mean for macroeconomics and macroeconomic outcomes? Let me run through a few of the main implications. On slide 12, the first set of implications has to do with a data-rich environment having an impact on growth and welfare. And there are several channels that have been proposed for why this might be the case. Data accumulation can allow for more efficient production, can allow for innovation, and it can possibly do these things with increasing returns to scale, which allows you to potentially boost the rate of potential growth. It can be used to improve allocative efficiency in markets, certain types of markets in particular, and it can enable the development of new, more customized goods and services. Okay, but the sign of the relationship here isn't necessarily clear. Data accumulation can also form barriers to entry that can hurt competition. These can stem from large fixed costs, or also from network externalities that favor winner-takes-all dynamics in data-rich sectors. And of course, proliferation of data can itself undermine individual privacy, and this can lower welfare directly. Okay, on slide 13, a second set of implications are for equity. And here are the points that we make. So what's received a lot of attention, and rightly so recently, is how data proliferation can promote inclusion by mitigating adverse selection problems that plague small and medium enterprises and more vulnerable households when they participate in traditional financial markets. This, of course, has received a lot of theoretical and quantitative attention in the literature, and I think has caught the eye of many policymakers, and rightly so. But one of the things that we mentioned in the paper is that data accumulation also can create losers as well as winners. Right? And so, for instance, if you give a monopolist granular data about their clients, about their preferences, about their income, their ability to pay, they can weaponize their market power through price discrimination strategies, and therefore charge higher markups and higher profits. Data can also lead to the exclusion of some high-risk individuals, and potentially in the limit where you have a sort of absolutely data-rich environment, we think it could potentially undermine the risk-sharing function of insurance. So now to slide 14, a final set of implications are for financial stability. And here we see two kind of broad buckets of channels. One argument is that by affecting the market structure and market power in the financial sector, data will influence financial stability trade-offs between concentration and competition, which is a set of trade-offs that's been studied quite extensively for a number of years. Introducing a data-rich environment, you might think, would have an incidence on where you sit on that trade-off. But a second set of channels is also important. And so since there may be inadequate incentives to secure data from cyber attacks, heavier use of data-dependent systems, particularly in finance, may increase the risks in some cases, or at least shift them onto centralized service providers, which raises new sets of issues that regulators and supervisors need to deal with. And now, as I switch to slide 15, I'll hand it over to Vikram, who will say a few words on data policies.
Thank you very much, Jan, and thank you again to all of our colleagues and friends who are on the call and listening to us in your Friday evening, hopefully with a pleasant beverage in hand. So let me just wrap up this presentation by talking a little bit about the policy implications and a little bit about data policy frameworks. So if we can move on to slide 16, Anthony. Our basic view is that just as the proliferation of data across all sectors of the economy has implications for macro outcomes, so also do the data policies that determine how data can be collected, shared, processed, and protected. And there are many examples of the data policy frameworks that are already extant. We have privacy laws, increasingly we have open banking regulations, there's a large trend towards data localization requirements, and of course we've had long-standing consumer protection measures. And one insight that we come away with at the end of all of this work, and I think as Jan has really nicely laid out for all of us to think about, is that these issues are all interconnected and integrated, and that when you think from a data policy framework, we need data policy frameworks that balance multiple competing objectives across growth, equity, and stability objectives that different policymakers may have a focus on. And in our view, this creates a complex set of trade-offs arising from these interactions. And so our main takeaway is, in our view, that data policy requires an integrated approach. And what do we mean by this? We basically see a need for policymakers to bring the many agencies who have a stake in these topics to the table so that the multiple trade-offs can be considered jointly. Our concern is that handling data policies in sector-specific silos could have side effects. And just think of two examples, simple examples. Consider, for example, if we were to strengthen privacy laws, which is an important, critical objective from a consumer protection point of perspective. When they ask the question, how does that impact the ability of firms to compete and innovate, and would this have impacts on lowering growth? Another example would be, let's say that we were to implement data localization requirements, which many countries are doing, from a national security standpoint. And in that context, though, we might ask, in a world like with extensive data localization, will firms be able to achieve the scale of data sets needed to tackle difficult AI ML problems? Think about in Luxembourg, if you had a company that wanted to start up a self-driving facility, and if the only data that was available was on the residents of Luxembourg, it might be very difficult to get the scale to train the car self-driving algorithm. If you want to do that, you'd want to have data to the whole European system, to all the individual driving information, the whole European system, or in the United States. So I think this is a side effect that we're quite concerned about. So let me move on to slide 17. So as Jan has mentioned right at the beginning, we see a prima facie case that data is raising for macro relevant concerns. And this is why we at the IMF are quite interested in the topic as well. The first is on market opacity. So a clear place to start is to clarify the rules of the digital economy. And our concern is that the market for data is too opaque. certainly from a consumer perspective. Control and access rights over data are unclear at best, and this means, in our view, that data is likely being overutilized, at least from the perspective of the individual consumer, and that privacy is not sufficiently being respected. The other macro concern is on competition. We seem to have growing concentration in data-rich sectors, with incumbents building market power and extracting rents through data hoarding, holding on to data sets which, as Jan laid out, were they to be more widely shared, would both increase competition and, by the mechanism of sharing, allow for people to exploit the non-rival nature of data to actually innovate and lift productivity growth in the whole economy. And the third macro concern that we have is the prospect for rising instability. And, you know, just to be very clear here, we recognize that all corporations and financial institutions have a very large stake in protecting their data and in protecting their consumers' data. There's no question cybersecurity is a major cost point, and there's a huge incentives for all institutions to protect their data. I think the subtlety that Jan was explaining was that while each individual institution may have this incentive, from the system perspective, from the perspective of the authority who's concerned about the overall system, would individual entities take into account the damage to system-wide trust that would take place were there to be breaches in any one part of the system, given the nature of cybersecurity? So we're concerned that we're seeing the potential for rising instability, not because of any individual action, but just because the world is getting more interconnected, and the prospect for these kinds of breaches to occur is increasing, as we all know very well. So tackling this systemic externality that people talk about is a challenge to monitor and regulate. And finally, let me close by saying that from the IMF's perspective, countries are approaching data very differently. And this is something that we've been thinking a lot about, and that we are going to be doing additional work on. And our concern is that we may be heading towards fragmentation. Now, certainly all countries are sovereign. They have the right to be interested in looking after their own individual concerns and prerogatives. Our only suggestion is that in thinking about the individual needs that countries face, we would argue that having some international discussion about whether there's scope to have common minimum standards and approaches so that we can minimize unnecessary fragmentation would be extremely important, because without this, there's a risk that with fragmentation, and for example, with the example that I gave you about, say, something like self-drive, you could see significantly reduced gains from trade in data. And also that this could hamper trade in goods and services that use data as an input. And I would think that this is an issue which would be quite relevant, including in a small financial, not in a small, but in a large financial center like Luxembourg. So with that, let me stop here. Thank you again very much for your attention, and be very happy to take any questions. Anthony, we're in your hands.
Gentlemen, thank you very much for that interesting presentation. We have a number of questions that have arisen. So what I will try and do, be it that this will be a first for me, is to allow those people to ask those questions directly, because I always find me talking on behalf of people is unnecessary. So I'm going to go first in order here. I think Dan Fahimi, if I click this button, Dan should come live. Dan, can you hear us? Can you speak? Are you on? Dan? Yes, there we go. Dan, you need to unmute yourself, and I think you can ask your question.
Hi, gents. Nice to hear that. It's great to hear the research at the macro level and looking at other studies. I've spent a lot of time and continue to spend time in open banking, going to open finance. And there's two issues. One is the issue of identity. So identity, should it be federated or self-sovereign? Should it be controlled by governments or by banks? And if I can ask quickly, Nazir, the other question that I put up there was compare the frameworks of the US and the UK so far. US market-led, UK kind of looking at regulation and controlling it from the open banking implementation entity. So the US had an industry consortium called FDX, and then the UK quite very controlled, getting the CMA9, asking quite politely for data sharing from the banks and having all these third-party providers. I'll stop there. Thank you.
Thanks, Nasir. Do you want us to respond
yeah,
as we go along?
Exactly.
Okay,
Yes, please.
Jan, do you want to take a first stab at it?
Sure. So I mean, I think the way we've been doing a bit more work on open banking, we didn't have a lot to say in this first paper, but it's certainly one of the main applications that we think are very relevant for the fund to look at. I think the way we conceptualize open banking, so it's kind of two things, right? So open banking regulations are about mandating data portability and interoperability within the financial sector, and I think that has potentially large implications for the traditional banking model, in which a bank would essentially be able to monopolize, to some extent, the information that they have over their clients, precluding some degree of competition. And as we study that less conceptually and more operationally, we come across these important issues like the one you raised. How should identity be managed and implemented? And I think Vikram has some views on this based on the Indian experience that I think could be useful for this discussion.
Yeah, thanks, Jan. I think I would say two things. One on the open banking part. So a lot of the discussion we've had, including with members of the high-level advisory group to the IMF that our previous managing director set up, and that Nasir is a very valued part of. A lot of the points that came up in that discussion was that the ecosystem is now quite diverse, and the ecosystem in finance and technology is very diverse. And regulation is still focused around what you might call the traditional intermediaries, of course, banks, in the last decades, increasingly non-banks, but the range of actors in this space has become very diverse. So I think in principle, from a sort of principles-based approach, there's a strong argument to be made for data portability and interoperability of systems. For the reasons that we lay out in the paper, this is something that is pro-competitive and allows us to use the non-rival nature of data to achieve better things. But there is a need at the same time, and I think in my view at least, to have a level playing field out here, which is that it's not just the case that incumbents who are already existing and operating in the space should be the ones providing access to their systems and access to APIs to their systems, but it should be something that is two-way, so that other entrants into this space also should be sharing data and providing access to information. My guess is that especially as we get into thinking about some of the larger technology players entering into financial services, defining what is the space of information that is relevant from a finance perspective that should be shared is going to be a key challenge. And then defining what is the perimeter of how far sharing and how far into existing systems the new entrants or existing incumbents are allowed to penetrate. I imagine those will be important questions. On your question on digital ID, I think that's key. I don't think that, I think our view is, and just to be very transparent with you, this is something that we've begun to think about. We haven't done a lot of work, certainly Jan and I, on the topic ourselves. We've begun to look at in the context of looking at the international comparative experience of approaches to open banking, for example. We have been looking at the approach that certainly the approach in places like the UK versus, say, the approach in Australia versus places like Singapore and India. Regardless of wherever the case may be, digital ID, to our minds, is key. We do need to have some ability to have identity which can be verified and attached to financial transactions in this in the digital economy. I would just say two things from the India perspective, which I don't think I'm going to fully answer your question, but give you some view at least. One is that operationalizing digital identity, I think, is a huge challenge. How do you actually make it come about, especially in countries with very large populations or where the level of income or the level of state capacity might be lower? And the India experience, I think, shows that self-sovereign identity has huge advantages out here. in terms of that you have a large population which may not have the ability to provide all the necessary documentation. The self-sovereign piece of the digital identity is actually is I think quite important in actually being able to achieve scale at a relatively short period of time. I think the other issue that comes up, and which is an interesting example from the India case, is the tension between digital identity that is managed and controlled by a state agency at a high level of federation, the tension between that and privacy. And we've had cases in India already which have been heard where the government at various points in time was seeking to increase the ambit of transactions that required the digital identity, the Aadhaar, for example, to be used. So if you want to buy a plane ticket, you want to buy a cell phone, you'd have to provide your Aadhaar identity card, your identity number. And there was a public interest litigation that the Supreme Court ruled against the government, saying that it was not permissible to use digital identity so widely. So in the India stack, which we think is an interesting example to how you might manage and balance concerns on identity, privacy, while also giving access to the use of this data, the India stack approach is to conceptualize of an entity as a data fiduciary that will basically manage your identity and your data on your behalf, and be, as it were, kind of a circuit breaker that would address the multiple concerns that there might be, which I think in principle sounds very good. Now, the question that we don't have clarity into yet and that we are still exploring is how actually this would be implemented. But from a sort of conceptual perspective, it certainly sounds like having a sort of a third-party neutral arbiter whose incentives are aligned more with the incentive of the individual would make a lot of sense.
Okay, fantastic. Thank you, Vikram and Jan. There's another question that's come in from Neja Baybel. Anthony, will you bring her on live?
Yes.
Yep.
Neja, please go ahead.
Yeah. Hi. So thanks a lot for this interesting presentation. I just want to have your view on the fact that when it comes to the data, we all have been taught that it's kind of really interesting things. I mean, to have data and to exploit them and things like that. But with this COVID crisis, we have understood that we face some kind of uncertainty. By that, I mean not enough data to understand what's going on. A lot of ambiguity, because even when we have data, we don't know how to interpret them. And, a more higher probability to fail or to get error from there. So how to overcome such situation from a data point of view?
So, Naja, thank you. I think that's a fantastic question, actually, and it's something that Jan and I have just been in this dark new world of COVID. It's something that we've been thinking about, and so the way I would answer your question, and Jan, if you permit me, maybe I'll take a stab at it first, and then please jump in. The way we've been thinking about it is that clearly there are many views about how we proceed with managing the pandemic and containing it, and what the final steady state is going to be. But it's very, and there are many policy pieces that will have to be sorted out, and there's a lot of uncertainty about all this. But I would venture to say that one part that is quite clear is that efficient contact tracing is key to containment and prevention of spread of the pandemic. And by that meaning that basically being able to keep tabs on who has gotten the disease, who's infected, and who they're coming into contact with, so that we are able to quarantine people and impose measures to ensure that the reproduction factor begins to drop. And the approaches to contact tracing are fascinating. In the East Asian context, certainly in China, where the state has the trade-off between the social need and the individual right to privacy there is, I think, very heavily in favor of the social need. And the approach that the authorities have taken is a very strong approach where contact tracing is mandatory, and individuals are cell phone penetration is extremely high, smartphone penetration is extremely high. So you have a situation where, because of that, both the high penetration and the mandatory requirement of use of contact tracing applications that use geolocation, it has been quite possible for the state in these contexts to have a what sounds like a fairly efficient mechanism for keeping tabs of the dynamics of the contagion and being able to implement policies of containment. Now, I understand that this is a big debate in Europe, where, of course, Europe with GDPR, has had an approach which places a very heavy emphasis on the individual right to privacy. And, I think it's something that we can all relate to and understand. I mean, this is a hugely important issue. So we see that this is a big challenge. How do you square the need to collect data and information, which has a huge public interest aspect to it? How do you square that with the fact that individuals don't want to be tracked and monitored by the all-empowered state? So we were wondering, again, this is an easy thing to conceptualize, but it's a question that we want, and one has to think about how to make these things actually operational. But we were wondering whether the approach being taken in India, again, with the notion of the data fiduciary, might be a way out. If you can imagine a situation where data in a social context where there's a high premium on data privacy, where this kind of contact tracing related data was collected in a manner that was fairly autonomous and centralized in an agency, maybe centralized with keys that were not known unless there was actually evidence that contact had taken place. And then there was some protocol that the keys would be revealed only to a third-party neutral agency that would not be associated with other aspects of the instruments of the state. Some mechanism basically where there's again a firewall, a kind of a cutout in between the individual and the state with all of its other aspects. Some in between kind of third-party neutral centralized body that would not see individual data until there was contact. So that's something that we think is, we wonder, and we'd be very interested to hear if other people have views on this actually. But it's something that we've been thinking about as maybe a potential solution, leveraging some of the insights from the India Stack approach to actually solving what is a very real and pressing problem. Yeah, let me turn it to you.
No, nothing to add. I think that was a good answer.
Okay, fantastic. Thank you very much. Thank you, Neja, for your question. Next up, we have a question from Suzanne Schatz. Suzanne.
Hello. Hi. Very interesting presentation. Thank you. I'm coming from a much more practical level. So in what we see today, I think, is that mostly data is being collected for specific means. So I'm collecting data to use it to then sell more to my clients or somebody else. You're coming from a much higher level approach of collecting data, protecting data, and how can we ensure there's access, all of this. How do you think that awareness could be raised at both an industry and a national level to say data needs to be looked at a much more general way, which will lead to a massive increase of the usages that you can make of data?
Yeah.
Can I take a first stab at this one, Vikram?
Yes, sir.
So I think there's interesting questions of how much people value their own privacy and their own data is a really interesting, fascinating field of study. And the answers are remarkably difficult to tease out of observational data. So there's this paradox of privacy that's well documented in the literature, where if you ask a survey, if you ask someone, how much do you value your privacy, people will always say in these surveys that they place a very high importance on their privacy. They would be willing to pay a lot of money in order to protect their privacy because it's super important to them. However, if you look at their actions in the data economy, most users are willing to trade away, sign a terms and conditions that releases, very important aspects of their personal data in exchange for, a minimal online service a lot of the time. And so there's this disconnect between how much people say they value their data and what their actions actually imply. And I think one of the ways you can square that, it's not the only way, but one of the theories that we see as being quite important is this problem of opacity. It's this question of, are people even aware of what is going on, what data is being traded? And so I think, one aspect of your question was to ask, how can we increase awareness, both among the public and among policymakers? And I really think a first step, and a step that's been, effectively taken in Europe already, but in the United States, I think is a little bit earlier on, is just to make sure that people are aware of the transactions that are taking place. And one of the ways you can do that is by setting rules, right? I mean, I think, when you buy an Alexia-enabled device in your house, what are the rules? What are they allowed to listen to? What are they not allowed to listen to in your personal conversations? What are they allowed to do with that data that they collect? Can they sell it on to somebody else, etc.? I think those rules just, I mean, there's a hodgepodge of legal precedent and rules that are out there, but I think for the consumer, it ends up being, you don't know. You have maybe some intuition, but you don't really know. And so I think having clarity is kind of a first step to making people aware of what's going on, and then to having a discussion about how we might change it.
Well, let me just add a couple of quick points to that. I think the claim that we make in our work is that the data, this is Economist talk, but so bear with me, but we make the claim that the data market is not complete. And it's not complete because there are pockets of information. Not everybody has the same access to information. It's not a level playing field, and therefore, I don't really know what my data is worth. I don't really know what I'm signing away, that kind of stuff. So I think Jan has really laid out the case that we feel. I think the steps have begun to be taken, and just resonating with me is your question about the practical aspect of it. And if I may perhaps shoot a little bit from the hip out here. Think about something like GDPR. We're basically now, in response to that requirement, data providers are basically asking us to check a lot of boxes as to whether we accept cookies, whether we are, as Jan said, willing to sign away a lot of things, a lot of fine print, etc. And in order to get a service, and it's very difficult for consumers to really, I believe, effectively. There's consent, and in my view, effective consent. And do you really understand what you're consenting to? So the analogy I would draw is, if you think, I'm sure there must be systems like this in Europe as well, but if you look at, for example, if you're going to be doing a mortgage finance in the United States, there's a well-established body of regulation and jurisprudence about what the consumer rights are, how you should inform the consumer about the risk that they're taking, including there's a long list of frequently asked questions, if this is the term of the mortgage, if it steps up, well, this is what your maximum payment could be. So that requires some coordination and cooperation to figure out what is the basic minimum information requirement to really make people understand what's going on, and to have a standard that can then be implemented uniformly across different sectors, and frankly, potentially across different countries as well. It may not be the same fit for every country, but maybe at least having some common approach, some common minimum approach would be helpful.
I think there's quite a few questions. We're not going to have time for them all, but I can't resist, Vikram. I need to follow up on this one, because we've had this discussion a little bit before. Is data an asset? If it's an asset, how do we protect it? Should we be protecting it as an asset? How should we value it? We've talked about the way that the app advertising industry, etc. I was wondering, Cher, if you've thought a little bit more about this and your thoughts on this for the audience.
Jan, you want to take a stab at that one?
Yeah.
Have you noticed a tendency? I'm passing all the difficult questions to Jan.
No, because you guys haven't used the word asset. You've managed to avoid it in your entire presentation. Very well done. So I'm just curious. I had to bring it up.
So whenever we talk about sort of well legally defined terms like assets, liabilities, and even property rights and ownership, our colleagues in the legal department, the lawyers who know this stuff well, always kind of perk up. So we try to keep things conceptual in our thinking. Clearly, data about individuals and data about companies is valuable. How valuable it is extremely difficult for some of the reasons that we've already discussed in the Q&A. The fact that if the data market is not complete, then the prices that you are currently observing for how much people are paying, how much companies say are paying to acquire another in order to obtain their data sets, these prices are not a reflection of how much the data is actually worth, right? Because the people who are involved, who are affected by the transaction, are not actually participating, or not fully participating. And so I think it's quite misleading to equate the transaction prices that we're seeing currently as being a true reflection of the full value of data. I think that's one thing that needs to be kept in mind. Vikram, I'll let you carry on.
Well, let me just, Nasser, I remember at one of the events that we had invited you to, you stunned the audience by saying, the value of your data, I think you said it was, I don't remember the number, but it was something like $100 or something like that.
$130 on average.
Yeah, I remember. Yeah. I remember you had that. And so, frankly, so Jan and I have laid out the point that the incompleteness of the market makes it very hard to discern. Maybe what Google pays for an ad every time you click or whatever. But I think from a public policy perspective, the other thing that we grapple with in terms of asset and valuation is the question about individual value, the intrinsic value of data versus the derived value. And I think that's a big public issue that has to be tackled head on, because there's a lot of political momentum for arguing that data is an individual thing, it's individually valuable and it's being exploited, right? And you got moves, for example, in California with some of the new data legislation, there was discussion about having a data dividend that people should be required to be paid by the data processing companies. And I think the argument we bring to bear is, where do you draw the line? If you have a company which is incurring the cost of aggregating and accumulating all this information, and then processing it with in-house, knowledge about how to process it in order to produce a product, how much of that, the value of that product, is the value of all the work that the company has done, as opposed to the value of the individual pieces of data that have been provided? So this is the topic actually we want to discuss with our lawyers some more. We wonder whether there are parallels from the jurisprudence on royalties, how you pay for royalties and use of intellectual property, for example, whether there's some analog that could be brought over. But we think that this is a very difficult question, but one that is quite central actually to maybe taking a little bit of the politics out of what it can be a very emotive discussion.
Thank you. Sorry for the difficult question. We got one last question. I'm sorry, I know that there's a number here, but I'm trying to do these in order. So we have a great question here from Jose Bello. Jose, are you there?
Yes, I am. Yes, I am. So my question would be regarding the situation that we're all living right now here in Europe and across the world, of course. And I would like to put this question out. How do you see data and data-driven decisions, decision making, make an impact towards the faster or slower recovery of Europe? Let's not forget that we have the GDPR here. And I'm all for the GDPR as a privacy professional, but can data, and not just personal data, also non-personal data, provide a boost to the economy with the current recession that we're all living on regarding with the COVID-19? And if you do have a specific example that you can think of, that would be wonderful. Thank you so much.
So my view on this, I think, is that data and digitalization, I was telling Nasser before we started the call, actually, that we've always been excited about digitalization and fintech, and we're at the IMF, we're huge supporters of the work that Loft has been doing as well. And the argument always was, this is the future, this is where things are headed, and we should be ahead of it. And my joke was that, well, the future is now, and frankly, COVID in some ways has brought a lot of these things forward. And one other point I would make is that I think there are a lot of lessons that advanced economies can actually learn from the implementation and the leapfrogging that emerging and developing countries have done with the use of mobile payments and other types of digital and financial technologies, leveraging both the technology, the network disaggregation, and the data in order to provide financial services to large populations very, very quickly. And I think this is going to become quite critical, actually, for recovery in Europe and in other parts of the world. I think that I'll give you two examples. I mean, one could talk at length out here, but two examples. We just had a private discussion with some of the leading Chinese fintech companies. It was an in-house thing that the fund organized. So I speak under the rules. We're not allowed to talk about individuals or reveal too much detail. But the general sense was that, in China, they have had very active fintech that's providing, leveraging big data from payment services and other products to provide, to do credit analysis and provide very rapid financing. And the argument that the colleagues in the session were making was that they had found that while there had been some drop-off during the lockdown, that they've been able very quickly to resume credit and credit operations. And that not only credit and credit operations in general, but credit especially targeted at small and medium business, which is a huge gap in most of the existing programs that are there, whether you're talking about funding for lending or the other programs that the UK is advancing, the Small Business Administration lending in the United States. These are the coordination and information problems of these programs is very large. And I think what you find is that in economies where they already have systems using technology, both to make the credit decision and to actually the pipes to get the money out, they are very effective. And I think it's going to be a really interesting experiment to see where the recovery is faster. And we know that small businesses actually in most economies employ a very large share of the total population actually. So I think that's one point. The other point is that kind of related to that is the last mile problem. The piping of getting government aid out to individual households and to businesses is very good at the top of the pyramid. So to get money out to financial intermediaries or financial institutions, you know, central banks know how to do that, have deployed it very effectively, really fast this time around especially. But how do you get money out to individual households? How do you get money out to small businesses? I talked about the small businesses already, but we think that to get money out to small households, for example, we're going to see increased utilization of digitalization-based services by ministries of finance, leveraging things like mobile pay, P2P, that type of service in order to actually get money into the hands of individuals. I mean, right now in the United States, one of the most sophisticated economies in the world, the fact that it takes 4 weeks for an IRS check, literally a physical check, to show up at somebody's house with $1,200, I think is a real issue actually. So to answer your question, I think bottom line, I think that this is a moment where we will see acceleration of adoption of some of these technologies and great interest on the part of the official sector for actually seeing whether we can use more of these technologies to deliver public services and directed aid actually in ways that are faster and more effective.
I'd like to say something maybe that'll sound a little bit conceptual and convoluted, but I think it's important at this point. So it's that, you know, AI/ML is really about predictions, right? It's about honing prediction models to try to infer what will happen in the future based on careful analysis of the past. And of course, we know that AI/ML has been very effective at a large number of applications and has been really scaled up across sectors. But I think one thing to keep in mind is that at the basis of that technology is the continuity between the past and the future. If that link is broken, so if you live in a time where people start living differently, people start interacting differently, people go about their day differently, people make decisions differently, data that you collected about the past is going to be less informative about the future. And, you know, so I think there's probably going to be, I mean, I agree with everything that Vikram said in the sense that data collection and data-driven decision-making is going to be important in the recovery, but it's important to keep in mind what data is going to be the key input to that. I think it's going to have to be the new data that we collect now, right? I think there's probably less we can learn from pre-pandemic data than there would have been otherwise. So this is really a moment of kind of structural break in a lot of relationships. And I think that needs to be kept in mind for all these data-driven decision-making processes.
Gents, we've gone over time, but it's such a fascinating discussion, really, genuinely very enjoyable. We have a host of other questions waiting, but we've just, I think, run out of time here. Listen, this is the bit that's always a bit awkward on webs, because what I would normally ask people is, can we have a round of applause for Jan and Vikram and this wonderful discussion? But I can hear virtual applause all around me. Gentlemen, real pleasure talking to you and fantastic to catch up with you both again. I hope we can do this again sometime soon, now that the world is a smaller place with this technology. We're all heading off, I think, in the next few minutes to our FinTech Friday, given that it's one of our evenings here. I think Anthony has put out the registration or the access link on the side. You both are welcome to join us if you are so free, but I know it's the middle of the day for you still, and I'm sure there's plenty of IMF important work to be done. But thank you all again for being there. Thank you all those that listened in. I think that was very, very enjoyable. I enjoyed it a great deal. Thank you both.
Thank you so much,
very much.
Have a
Nasser.
great afternoon. Take care. Bye-bye.
You too. Thank you to you and Anthony. Bye-bye.
Bye-bye.